Normally at this point in the business cycle, I'd be telling you to steer clear of the home builders because interest rates are heading higher. And that's going to make getting a mortgage more expensive, right? But last week, the nation's largest home builder, Lennar, painted a very different picture. Their theory is this time is different. Millions of people left the labor force during the Great Recession, and as they start getting jobs again, they're much more likely to buy new homes. And that's why they told us to watch the labor participation rate. They argue an uptick in that number will be more than enough to offset the impact of higher rates. So do we believe his theory? I think it's credible, even as the Labor Department's last non-farm payroll number was really, let's say, underwhelming. That said, we could use some expert judgment here, which is why I think it's important to hear from Taylor Morrison Homes, THMC, the home builder with a presence, get this, across California, Arizona, Colorado, Florida, Georgia, Illinois, North Carolina, and Texas. So yesterday, I got a chance to speak with Cheryl Palmer. She's the chairman and CEO of Taylor Morrison Home Corp. Now, the company is in its quiet period before earnings, so we couldn't talk about the quarter. But that still left us a lot of ground to cover. So take a look. Cheryl, what I need to know is there is a perception. Fed's raising rates. It could be 3 this year. Got to sell the home builders. Aren't there other factors at work this time, given how low rates are and how every time in the economy is a little different?
Oh, so true, Jim. I subscribe to everything you said around unemployment rate, labor participation, but that's really only a couple areas. Okay. I mean, I think we should be focused on some of the demographic tailwinds we have. I mean, think about the baby boomers and the millennials. Between them, there's 150, 160 million. We're only, 1.2 million houses. Think about the confidence of consumers today. They're feeling good about their jobs. They're starting to see income growth. We have such a tight supply. I mean, the list really just keeps going.
Well, I want to drill down on this, these different demographic cohorts.
Yeah.
There are still a lot of people who live with their parents, and there's still a lot of people who are turning 55, aren't there?
So 25 million plus of the millennials are still living at home.
Really?
So you think about a third of them are still living at home. The average age of the millennial buying today, Jim, is somewhere around 30, 31. The largest group of millennials is turning 29, 30. So we have so much runway ahead. And then you think about the financial security of the boomers. So I'm very bullish about where we're going.
Okay. When you say the housing market is tight, I want some people to understand. We were building 2 million homes when we were a much bigger country than we are now, right? I mean, it just never came back. Why?
I think there's a number of reasons. I think if you go back 4, 5, 6, 7 years ago, there was one set of reasons around people, unfortunately lost their homes during the downturn. Right. So they had one set of circumstances. I think employment 7, 8 years ago was a very different place. So I think, as time has progressed, we continue to see different factors. Today, it really does come down to the labor infrastructure, lot availability. And that's good news, bad news, because I think that gives us a lot of runway ahead as we are continuing to build on the deficit of the supply. So we're building 1.2 million houses a year, and we probably need to be somewhere between 1.5 and 1.6.
And you're pretty much covered for all of them. You got entry level, first move up, second move up, 55 plus active lifestyle, urban infill. So you can switch, right? You can pivot wherever the demand is. Where's the demand the most in these cohorts, and where is it geographically?
So that's the good news about what we're seeing today. And I think that's one of the things that gives us such great confidence about the longevity of the cycle is truly we're seeing strength across all consumer groups.
All groups.
We're seeing it in the first-timers. And our first-timers, about a third, and a third for us, that first-timer, that professional to income, the affordable. So even that has multiple subgroups. That first, second-time move-up, we're seeing great strength. And the luxury market today, meaning that could be coastal at 2, 3, 4 million. That could be first-time buyer at 800,000 in the Bay that some might consider luxury. Wow. So we're seeing strength geographically and across consumer groups.
It's one of the reasons why I like the cohort and I like your stock. I have to take advantage. Today is equal pay day. You're a female executive. I just need you to fill us in on what you think of the subject.
Well, it's certainly getting a lot of airtime. And, my views on this might surprise you, Jim. I think I have a very practical approach to how I feel. I mean, I think it's misunderstood as we talk about some of the generic titles. And, hey, I think we have a long way to go. I think in our industry and across genders, we just have a long way to go. But the way I think about it is people make different amounts of money for different reasons. And, we can look at titles and say, simply speaking, somebody with the same responsibilities, doing the same job, with the same education, managing the same book of business, they should make the same amount of money. But finding those that match is next to impossible. I look at our organization, and we pay a lot of attention to this, Jim. You know, this morning you mentioned we had our division presidents up there. About a third of our management is female.
I saw that. I thought that was, wow. I said, that's different from what I would have expected.
It's pretty different for the industry, but I'm quite proud of it. And, you know, we have women that make in the same roles more than the men, and sometimes men that make more than the women, because you have to look at more than their role. You have to look at their responsibility. So certainly, as a country, we have a long way to go. I think the real question we have to ask, though, is do we have enough women? And do we have diversity, not just in our business, but across? That's really where the challenge lies. Then we can talk about equal pay.
Fair enough. I'd like to leave it on that, I think, because that's a very thoughtful answer to a tough question for the whole country. Thank you so much. But that's Sheryl Palmer, Chairman, President, and CEO of Taylor Morrison Home Corp. Remember, in quiet period, but I can tell you doing quite well. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.